Let's take it over to Yatin to talk about Tata Motors. Big loser on the index. It's cooled off from the low point of the day, but what are brokerages saying, because JLR seems to be a drag for the company once again?
Clearly, Avan, there have been a couple of concerns on the JLR front. There are three major concerns. Number one is the new launches by the competitors. Number three is the Chinese emission norms, which have changed from yesterday, according to a circular of the Chinese government. And third is on the valuation front and really how the peer set for JLR has been panning out. Let's start with how the things are panning out in the Chinese market, which accounts to 20% of the sales volume and 40% of the EBITDA generated for JLR. Now, the Chinese authorities, because of the various pollution control issues, have laid down norms for bringing out fuel-efficient cars and various emission norms, which might be detrimental for companies like JLR, because they would have to modify and invest into R&D in order to get those emission norms getting cleared. But we have a lot of brokerages like CLSA and Macquarie, which have come out with a note clearly indicating that the new models which have been launched by JLR and which are in the pipeline will be more or less in compliance with the emission norms, and there could be no more incremental capital expenditure required as projected by the market participants. We had IDFC, which clearly indicated that the capital expenditure plans which are there in the next 3-4 years, it would make JLR impossible to generate free cash flows till FY16. So these are the few concerns on the capital expenditure side and the Chinese emission side. But most of the brokerages are maintaining a buy rating, given the fact that the Chinese norms are not very new, have been intimated to the company 6-8 months back.